similar to life insurance here, but disability insurance is a little different, right? Disability insurance protects you and your family from a potential catastrophic loss if you were to become disabled and your income is reduced or goes away entirely. Right? If you don't have disability insurance and you become disabled, you then risk making a difficult situation even more difficult. Now, I've been known to say that disability insurance may be even more important than life insurance, but I should probably hedge that and say that both truly are important. But the reason why I sometimes say disability coverage may be more important is because, right, if you think about it, if my income is lost due to my death, right, I'm gone. I'm no longer an expense, right? I'm no longer eating, being clothed, etc. But if my income is lost due to disability, I'm still around and I'm still an expense, right? So that's where I think an argument can be made that there's potentially a bigger, risk due to disability, at least, certainly a complete disability than there may be from life insurance. But the right answer is both are important. Now, disability insurance, or DI, is typically limited to replacing no more than 60% of your normal earnings, and benefits are triggered when you meet the contract policy's definition of disability. Now, there's two primary ways that those disability may trigger in. One is considered your own occupation, or own OC, and the other is any occupation, or any OC, right? So most policies are any OC coverage, right? So that, if you think about it for a moment, that's like the broadest level of coverage. So it's basically saying, right, so for most of us who have, sort of office jobs, and we become disabled and we're not able to do any occupation, then the policy would kick in. As opposed to your own OC, it's going to be more restricted, and that basically says if you're disabled and that disability meets the criteria that you can no longer do your specific occupation, then it will kick in. But if you could find work doing something else, then it won't pay a benefit, right? So the own OC coverage generally makes the most sense, right? If you think about it for, right, a professional athlete, or even like a neurosurgeon, right, or some more specialized kind of niche professions where truly if you can't do that occupation, you may not really be skilled, or have the ability to find other work. Disability insurance is primarily, you can buy short-term or long-term coverage, right? Short-term coverage generally will cover up to 6 months that you're out on disability, right? So it's basically just saying, I've been injured, I expect to get back to work, but for my recovery time, while I'm not working and have income, my short-term disability policy kicks in. Then, as you can probably imagine, right, long-term coverage is for beyond 6 months, where if you're disabled and it's going to be more than 6 months that you're unable to work, then the long-term disability policy kicks in. So here's a great example of some ways that people will self-insure, right, or retain some of the risks. So some folks may say, you know what, I've been able to put away enough money, build up an emergency fund, where if I have a short-term disability, I'm going to be okay because I'll be able to pay the bills because I've got savings in place. So I'm going to save the money and not pay premium for a short-term disability policy. But I am fearful of a bigger catastrophe, right, where if I'm not able to work for the long term, I want to have coverage in place for that. So that's just one way to think about it. But if you don't have, right, the emergency savings set aside, and you really would be up a creek, as they say, if you were disabled even for just a few months, then it can really be worthwhile to have short-term disability coverage. Now, both of those are generally what we'd call private pay, right? Either you pay for the insurance coverage, or your employer pays for the insurance coverage. And just a quick note here to understand that if your employer pays the premiums for your disability coverage and you become disabled and you start receiving benefits, those disability benefits will be taxable to you. Versus if you pay out of pocket for the premiums and you become disabled and you receive disability payments, those disability benefits will not be taxable to you. So just an important thing to understand, and it's good to understand when you're looking at, how much coverage do I need, Right? If you're paying the premium, you might need a slightly less amount of coverage than if the employer is paying for the coverage, right? Because your net after-tax benefit will be different.